It is scary. It is particularly scary when you have 9 countries or so with nuclear weapons, and people working on something even more. We have not dealt with this. We do not know what is going to happen. Over the past few years, there has really been one repeating news story when we look at Warren Buffett. It is that Berkshire's cash position keeps getting bigger and bigger and bigger. Buffett finally gave us a little insight into what he has been thinking about the stock market recently. He sat down for 30 minutes with Becky Quick during the Berkshire Hathaway shareholder meeting. In this interview, he spoke about why he's been building that cash pile up. He talked about whether he plans to deploy it and also whether he sees a market crash coming in the year ahead. In this video, I want to show you guys all the important clips you need to hear from the man himself. I will break down exactly what he has been saying. Also, very quickly, shout out to everybody who came up and said hello over the course of the Berkshire weekend. It was really great to see you all. A massive thank you to all who came to the launch party for the new money strategy. Big news, as of today, the book is officially out. Check out the links in the description or the pinned comment if you would like to learn the Warren Buffett strategy for yourself. Thanks to all of you who have supported it thus far. Okay, back to Buffett. The first question is, why on earth is he holding $380 billion worth of cash? He was asked if he is looking around and not seeing a lot that he wants to invest in. He said, then we do not do anything. Of the 60 years he has been in the business, probably 5 of them have been really juicy. He mentioned Tom Watson Sr. of IBM, who said he was smart at spots and stayed around those spots. That is the whole thing. This was a really interesting clip from Buffett, and it highlights his strategy. He is not a trader. He is not an investor that is going to make 20 investments per year. His secret has always been to wait, and that is what he is doing this time around. He noted in that clip that there have only really been 5 exceptionally juicy years in his career. Opportunities like that do not come up very often. When they do not, he is much more inclined to keep his watch list within his circle of competence. He would rather just wait as opposed to sinking money into the market just because his cash pile is getting too big. Warren admits that right now it is not the ideal environment for his type of investing. That leads him to be fairly inactive. When you look at the ways that Buffett values the stock market, they all scream that the market is really expensive. Take the Shiller PE value, for example. I have spoken about this one a fair bit recently. This is like a big price-to-earnings ratio for the S&P 500. The higher the number rises, the higher multiple of earnings investors are willing to pay to own the market. In normal conditions, it is around 18 to 20. That means 18 to 20 times the earnings of the S&P 500. I was actually talking to one of the guys I caught up with in Omaha this year named Ben. He was showing me that right now the Shiller PE is at the second highest point it has ever been in history. It is only behind the dot-com boom, and it is now actually very close to passing that peak. Another indicator Buffett always looks at is called the Wilshire GDP. It compares the market cap of the total market index with the GDP of the United States. It compares how much investors are valuing companies versus how much the economy is actually producing. For this metric, when it gets past 120 to 140%, investors start worrying. They worry a lot that the market is getting really overheated. Today we sit at a number around 230%. We have never seen this metric so high in all of history. With the market looking as expensive as it was before the dot-com crash, Buffett just is not finding opportunities. He says he understands fewer of the businesses as a percentage of the whole than he did 10 years ago. He said he has not learned new industries for some years. He is not going to learn them now, and he is not going to have an edge on younger people who grew up with them. But he says you do not have to understand too many of them as long as you understand something like Apple. That has always been the Buffett philosophy. Yes, the market is hot, and no, he is not really finding places to put his money. The one thing he absolutely will not do is drift outside his core competencies to chase returns. A lot of people are doing exactly that at the moment. Buffett acknowledges here that the AI craze we are seeing now is well outside his own circle of competence. I would also argue it is outside most people's circle of competence too. At the end of the day, it is a very new industry. There is no clear leader at the present time. There is not a really good understanding of how valuable this technology will be to these big tech businesses in 10 years. I am sure it will be valuable, but at this stage it is really anyone's guess as to who comes out on top. That brings us back to Buffett's rule number 1 of investing, which is do not lose money. If you are not super confident in the outcome, it is okay to put it on the too hard pile and just move on. But that is the polar opposite behavior to what we are seeing in the stock market at the moment. Rationality seems to have been left at the door. In the interview, Buffett really called this out. He compared the markets to a church with a casino attached, and people can move between them. He said there are more people in the casino and it has gotten very attractive to people. If you are buying one-day options or selling them, that is not investing. It is not speculating. It is just gambling, totally. There is nobody that can explain why they are buying an option for one day. The quantity of those things is just incredible. He says we have never had people in a more gambling mood than now. That does not mean that investing is terrible. It does mean that prices for an awful lot of things will look very silly. This is very true. Buffett talks about the increase in volume of short-term options. Stock options are financial products where you can bet on the direction of a stock. For example, if you buy a call option with a strike of 20, you are betting the price will rise. If you buy a put option with a strike of 20, you are betting that the share price will fall. Options can have expiry dates that go out a month or even years. But Buffett is saying that the volume of options that expire in one day or less is skyrocketing. This can only be gambling because obviously nobody knows which way a stock will go in a few hours. The data backs up what Warren said. In 2018, the volume of options with short expiry dates was way less than longer-term options. Fast forward to 2026, and that trend has completely reversed. Short-term options are the name of the game right now. There is more trading volume in contracts, expiring within a week than those with longer durations. It is particularly wild when you look at people trading the index or ETFs. They are betting on the market itself as opposed to betting on a certain stock. It is honestly incredible. This has been one of the biggest recurring themes of what Buffett has said lately. He believes the stock market is turning more and more into a casino. But does that mean that it is destined to fail? We have gamblers running rampant, and we have stretched valuations. The stock market looks as expensive as the dot-com era. So does Buffett see it cracking? He says he is always looking for the next juicy year. He says the best opportunities have probably come when the macro environment leads to panic. The most likely time to buy things is when nobody else will answer their phones. But he says if you could see a panic coming, then it would not happen. You do not worry about what people are talking about. Something always comes out of the blue. A nuclear bomb can come out of the blue. He mentioned the Archduke getting shot in 1914 for World War I. If it is something people are already thinking about, it is probably not going to happen. This is probably the biggest thing people get wrong about Warren Buffett. The news articles will always say Berkshire builds up $380 billion of cash. Then they will talk about Buffett preparing for a stock market crash. But what is interesting is that from his 60 years at the helm of Berkshire, he has learned something else. He is 95 years old and he bought his first stock at age 11. In that time, the one thing that Buffett has learned is that you can never anticipate a crash. There are situations where stocks are more likely to underperform than outperform, but to be able to predict exactly when the market falls like a brick is impossible. As he notes, if people are already talking about it, it is not that. We do not know what can happen tomorrow. Buffett does not like to tell people the end is coming. He says it does not do any good to worry about it. It is good to be cognizant of it, but the worrying is terrible. So with that said, what do we as value investors do at a time like this? There are really two things we need to remember to keep investing like the GOAT. Number one is that we need to keep investing bottom up. That means we stay within our circle of competence. We build our own unique watch list of businesses. We assess them for a moat and for trustworthy management, and we check the valuation. Those are the 3 steps which I talk about in my book. From there is another thing we need at a time like this, and that is, of course, patience. Charlie Munger used to say, we do not make money when we buy. We do not make money when we sell. We make money while we wait. The difference between mediocre investors and exceptional investors is always their temperament. When market conditions get sketchy and overvalued, can they hold their nerve? Can they avoid throwing all their cash into speculative and overvalued stocks? Then on the flip side, when the markets do come down, can they keep control of their emotions? Can they invest with confidence as Buffett has done for 6 decades? That is what it really comes down to. If that sounds like the type of thing you want to learn more about, I would appreciate it. If you checked out my book, it is called The New Money Strategy, and it is out now, which is crazy. Please look for it in bookstores and airports. If you see it or if you bought it, I would absolutely love it if you sent me a picture. Tag me over on Instagram at new.money.official. I will try to feature some of your photos in upcoming videos. Thank you so much for your support with the book because it really does mean the world to me. If you want to order it, the links are down in the description. This book was 2 years in the making. A lot of blood and sweat and tears went into making this. I am really happy that it is now out. Thanks very much for watching, guys. I really appreciate you all, and I will see you all in the next video. Stay boring. Stay patient. Peace.